Okay, so it seems Asian markets have finally made up their mind and the color is green. A lot of the initial opening volatility has now given way to broad gains, and particularly in these two markets, the Hong Kong market as well as Taiwan. They're the strongest in the region, but Japan's also okay, and Singapore is up about 0.3% as well. So looking good. The implied open is suggesting that we could still start 20-odd points lower. Let's see, some caution there, given the extent of the fall last week. Let's talk about individual stocks as well, which are the ones that you have to keep your eye on. Earnings season is now behind us. We only have some tail-enders, but our team is standing by with the CNBC-TV18 list of top stocks to watch. Hi, guys. Good morning and a happy Monday to all of you. So, Darshan, you go first. M&M came out with some of the details of the bookings they've made for their new high-profile electric vehicles, is it?
Morning, Survi. So, M&M has announced, basically disclosed the initial booking update of its recently launched two electric vehicles, that is XEV9E and BE6, and booking is looking good on first day of the launch, that was on February 14. Company is saying that it has received bookings of around 30,500 units and booking value is around rupees 8,500 crore. Good part is that XEV9E forms 56% of bookings and BE6 forms 46%, and Top and Pack 3 accounts for nearly 73% of total bookings, and deliveries are expected in March. But now what we'll have to see is what is the cancellation rate, because if you look at this total booking, that is 30,500 units, it amounts to basically translates to order book of nearly 6 months, because M&M after Q3 con call has announced that initial target for these two electric vehicles is 5,000 units per month. So the focus would be on cancellation rate, but on the back of very good booking on the first day of the launch, I'm going with green for M&M.
Okay, all right. So thank you very much for that. So Mahindra and Mahindra in focus this morning. Let's talk about Glenmark Pharma and GSK as well. Vinny is here with details. Vinny, good morning.
Good morning. So both these are in focus today on the back of their earnings. Now, Glenmark Pharma missed the street estimate is what we're seeing. Now, red is what we're expecting. Net profit of the company, surely they came into a profit this time versus a loss, but there was an inventory adjustment then when you look at it. And that is why revenues are also looking like a very strong growth and a sharp growth that has come in. But do not forget that adjustment that is there is what we're watching out for, because on a 2-year basis, revenue growth, when you look at it, it's approximately just 1-2%, quite a flattish growth that we're seeing. R&D spends, they have seen a very sharp decline because innovation was something that was lower. So that is not that much of a positive when you see a 27% decline in terms of R&D spends for a pharma company. Margins 17% versus the expectation and the guidance that they're doing is 19%. So it's still lower than the guidance, though the management had spoken about recovering in the second half of the year. So sequentially improvement in terms of margins, but still missing the guidance is what we're watching out for. And lastly, price erosion has led to a muted performance in the US business, and that is why Glenmark Pharma, we're expecting red. GSK Pharma, on the other hand, a strong set of numbers, 35% growth in terms of profits, revenue growth of around 18%, margin seeing an expansion of around 300 basis points, good traction across all their segments, cost efficiencies supporting margins, general medicine volumes have seen a growth of 11%, and management is expecting to sustain these levels of margins going forward. They have some launches also planned in FY26. That would be a positive given that they are oncology launches. So that is what we're watching out for, and green expected today.
Okay, all right. Thanks a lot for that, Vinny. So from Dawa, let's go to Daru. Mangalam is here to tell us about United Spirits. Mangalam, tell us what is your analysis. I'll tell you about the testing. Go ahead.
I'll tell you about the analysis, Nigel. So if you like American bourbon, the likes of Jack Daniels, etc., they might come at a slightly more favorable price to India right now, and that's because of the announcement that came over the weekend. India has actually lowered tariffs on imported American bourbon from 150% to 50% itself. Remember, this is one part of the overall taxation on imported alcohol in India. The tariff, the other parts are, the central and state duties, which haven't been changed. So this is one part which has been slashed from 150% to about 50% itself. And reports suggest that India has imported bourbon whiskey worth nearly $2.5 million in 2023-2024 itself. And a large part of that, nearly a fourth of that, came in from the US. From a listed company standpoint, who does this impact? Maybe some increased competition for players like United Spirits, but the overall prevalence of bourbon in United Spirits portfolio is not as much. They do have the American Pride, which is a blended whiskey brand made from bourbon and Indian neutral grain spirit. So that is one of their products which it directly competes with. See some mild red on account of that. But the good part, the larger good, is that if there are favorable policies coming in from the government on account of import of alcohol, maybe some of these companies go ahead and import products of their own for the Indian consumer. We'll keep an eye out on it.
Okay, so bourbon whiskey all set to get cheaper. Not sure about the consumption. I'm sure Nigel can tell us a thing or two about that.
Very small, right, here in India.
I'm not too
Bourbon.
sure, not a whiskey drinker, but I don't think it's that big here, right?
I mean, as a percentage, the total imports, I think, of bourbon into India is less than 25 crores in the previous year.
Okay.
So that's how small it is. That's a normal retail shop in Delhi.
Okay, fine. So not much of a threat, I think, not much of a competition or disruptor.
But you have an
perhaps.
option now, and we'll have to see what kind of impact it can have.
We will see. We will see if habits change. And let's get back to some other stocks that are in focus this Monday morning as well. Back to Vinny for that. Vinny, what else is on your list?
So a few more earnings that we're watching out for. RVNL, firstly, expecting red here. Net profits are down by 13%. Revenues, very, very muted performance this time. Margins also have remained flat, so not an exciting set of numbers. Operationally, seems like a muted set coming in. Execution is something that we should be keeping an eye out on in terms of commentary from the management. ABFRL, also we're expecting red here. The company's net losses have surely reduced a bit, 51 crores versus 77.9 crores last year. But overall, it's missing the street estimates. Revenues are just a 3% growth. Lifestyle business of theirs is quite flattish on a year-on-year basis. Pantaloon business has not done anything great. Mainly the growth was impacted because festive season had moved from moved on from Q2 and came into Q2 versus Q3. So yes, that is something that is impacting. Margins were supported by cost efficiency. So margins seeing an improvement on that front, 14.8% versus 13.3%. Lastly, Narayana Health is what we're expecting, a green coming in. Good growth that came in as a surprise growth was from the Cayman unit of the company. And that is what is something that the street was watching out for, that when would he start seeing a recovery or, moving towards the positive return front. So faster ramp up there. International patients from especially coming in from Bangladesh still remain a concern because international revenue has halved versus last year and last quarter. Now revenues 13% growth overall, margin seeing an a bit of a muted performance. Keep an eye on Narayana Health. Green is what we're expecting here.
Okay, all right, Vinny, thanks very much. In fact, we'll be chatting with the management of Narayana Health in a little while from now at 9:40 a.m. We'll have Sandhya J, the company's CFO, joining in. But with that, let's quickly move on. We had numbers come out from Borosil Renewables as well. Vivek, morning. How do they look?
Well, good morning. Largely along expected lines, Q3 was a very muted quarter for the company. Export markets saw significant demand erosion, and in the domestic market, while there was demand, volumes up almost 14%. Like the company has been alluding to, there has been significant realization decline as far as the sales prices are concerned. So revenues, although they were higher by close to 9.5%, the company actually saw an operational loss of a little over 10 crore rupees versus an EBITDA last time of over 20 crore rupees. On the back of that, there was a loss on the bottom line as well. Close to 30 crore rupees loss that the company saw this time around versus a loss of 15.5 crore last time around. On the back of the fact that there has been dumping, domestic prices have fallen significantly, and this is what has led to the problem. However, we expect the stock to open in the red, but do not be surprised if we see a recovery, because there are two important developments that has happened in the last 2 weeks as far as Borosil Renewables is concerned. Number one, there has been a final application of the anti-dumping duties on imports of textured, tempered, coated and uncoated glass. This is from China as well as Vietnam, and this is for a period of 5 years. And also the Commerce Ministry has recommended the imposition of definitive countervailing duty on solar glass imports from Vietnam. Both of this is expected to support the domestic industry, where Borosil Renewables is the largest player.
All right. Thank you very much, Vivek, for that. So that's an interesting one, as always, to track. Now, Zentech and BHEL are the next ones we want to focus on. Upasana is here with details on both. Upasana, morning.
Good morning. First up, let me start with Zentech. Company overall reported a steady set of numbers. Revenue increased by 53% on a one-year basis, while company says that it is on track to meet its FY25 revenue guidance of 900 crore. And coming to PAT saw a growth of about 42% on a one-year basis, which was mainly aided by sharp rise of 4.2 times in the other income. EBITDA margins were under pressure, down about 1,370 basis points at 29%. This is mainly because of the sharp rise, that is nearly about 4.8 times rise in company's finance cost, impacting the overall margins. Company is confident of achieving its EBITDA margin guidance of 35% and PAT margin guidance of 25% is what the company has indicated. Now, company's order book position also stands strong at 817 crore as of 31st December. Now, company has also announced integration of Vector Techniques and Bhairav Robotics into its portfolio, and it says that these acquisitions will further enhance company's expertise in UAV propulsion, autonomous robotics, and even advanced aerospace components. Company has also acquired Applied Research International, which will also bolster company's defense simulation capabilities. Now, coming to BHEL, the stock will be in focus today on back of the order win. The company gets LOI for a project worth 6,700 crores from Signeri Colliers company. Hence, even this stock will remain in focus, and I expect both these stocks to open in green today.
Okay, all right, got it. Thanks very much for that. Upasana, let's quickly recap the list of stocks to watch today. The ones that have positive news flow around them are M&M, GSK Pharma, Narayana Health, Zen Technologies, and BHEL. The ones that perhaps may start a little soft could be Glenmark Pharma, United Spirits, RVNL, Aditya Birla Fashion, and Borosil Renewables. All right, let's now move on and figure out how the week has started for the commodity markets. We have Manisha joining in with the latest. Manisha, good morning and happy Monday to you. What's happening?
Thank you for that, Surbi. Well, we've started commodities open slightly on a lower side. Well, all-time high was 29.40 last. We are trading around or below 2,900 right now. So there is some profit taking after that very strong run-up that we saw in the gold prices. Having said that, tariffs, inflation concerns, and a lot of physical buying for gold clearly has been supportive. Silver also trading very close to its 3-month highs. We did see prices gain up for a 6th straight week in the previous one as well. The crude oil prices, after hitting $77 a barrel, are trading at a 74 right now. The markets are watching out those statements of a peace possibility between Russia and Ukraine, and that has taken some premium off the prices. And when you look at the metal prices, well, we have seen a very slight marginal profit taking here as well. So even as copper prices are holding around those 3-month highs, but they're off the lows that we saw in the previous week, the markets will watch out for more economic data in this week and, of course, statements to take further cues.
Yeah, it's an important one, Manisha. Yeah, thanks for reminding us. Those supposed peace talks, I think officials from both sides meeting in Saudi Arabia, I think, to sort out the Russia-Ukraine issue. And maybe, hopefully, because of that, we won't have any more tariff headlines, at least in the next couple of days. Thank you for that. Well, let's take a very quick break on that note. We'll come back on the other side and connect with Prakash Diwan. We'll discuss some fundamental stock ideas.